As per usual, with the stock of the day. I'll detail it for you, and Adam, don't worry.
Thank you.
Viva Energy is buying convenience retailer On the Run for $1.15 billion. The deal is for a network of 205 convenience retail stores, and it will see Viva Energy become one of the biggest the biggest non-government employer in South Australia. So that is just a little fun fact for the day, saying that it will be replacing the Coles Express brand over time. So get used to saying OTR. That's according to CEO Scott Wyatt. So let's get a view on the stock of the day from my expert guests. Henry, I'll start with you for Viva Energy, because this is a company that a lot of analysts have been pretty positive on, given the atmosphere for energy prices in particular and its push into retail.
Yeah, and it looks like a good deal. The market seems to like it. The stock's up over 5% today. They're not issuing any equity, only to the company they're buying on the run. So it looks like the market likes this. They have got a pile of cash, and they're using that for this deal, which is good. And you know, petrol retailing at the moment, the margins must be big and fat, let's face it. It's a pretty good business, and of course adding the convenience stores as well is good. I can't see anything wrong with this deal. The stock keeps sort of grinding slightly higher. It's had a bit of a blip up today, so yeah, it looks okay.
Interesting. Back in reporting season, Macquarie did flag that there could be further acquisitions on the horizon. So when you think about Viva Energy, even apart from this acquisition that was made today, look, it had pretty strong result that came through. Quality of earnings was better, considering you've got retail. Yeah, dividend was good. Yeah. You know, it's got retail, commercial earnings growth. What happens though in terms of refining margins? Is that the big question when it comes to Viva always going forward?
Well, yeah, it is absolutely, because we're beheld by the Singapore refining station, I guess, so everything has to go through Singapore. So really, those refining margins are very lucrative for the refiner, but Ampol or Viva, these guys are the ones that have to sort of take those prices as they come through that refining margin. So potentially, yeah, it's an okay thing. One of the things that I did see in this announcement is that OTR, they are part of the deal getting Smoke Mart, which is and gift box tobacco. So some wholesaler of cigarettes in there as well. I suspect they might divest some of that, with ESG being a bit of an issue going forward. So they might sort of digest that. But overall, it looks like a really good deal. You know, I've always seen this one as more of a REIT. So in other words, just real estate, looking for that sort of property side of things. But yeah, management look really good at the moment, and it's all moving in the right direction for them.
I don't think I got whether it's a buy, hold, or sell from either of you. Henry?
I'd say it's a hold.
Yeah, I'll stay with a hold as well. Just on that price action alone, potentially it looks like it's broken out, but I think it potentially could come back and retest those levels, so hold.
There we go. That's the stock of the day, and it's a hold from both of my guests.